Did you know that trading the wrong forex market instrument or currency pair can drastically reduce your chances of being successful? If you have ever felt overwhelmed by the endless list of forex currency pairs and wondered how do I pick the best currency pairs to trade, then you are in the right place. I am going to open your eyes on why trading the wrong forex market instrument or a currency pair can be disastrous to your trading. And also I will give you the proven method to solve this problem. So grab a pen, grab your favorite notebook, and let's get to work. Have you ever wondered why some traders always seem to struggle no matter how much effort that they put in? Well, it's not just about picking any pair to trade and hoping for the best results. When you choose the wrong instrument, it can lead to a series of unfortunate but avoidable losses. And today we are going to explore exactly why that happens. And you are definitely going to have access to the proven system to solve this serious problem. Trading the wrong forex market instrument or currency pair can lead to several significant disadvantages, including the following. 1. Increased risk of losses. Trading pairs that are too volatile for your risk tolerance can lead to large unexpected losses. And also trading pairs with low volatility may result in minimal profit potential. 2. Higher trading costs. Trading the wrong pairs will expose you to suffer a high cost of spread, commission, or slippages. And in some cases, your trade are executed at a different price than expected. 3. Difficulty in analysis. Some pairs may have less available information and fewer analytical tools, making it harder to perform accurate technicals and fundamental analysis. Some pairs may not follow traditional technical patterns or economic indicators, leading to unreliable analysis. 4. Increased psychological pressure. Frequent losses or unpredictable market behavior can lead to increased stress, anxiety, and overtrading, which can negatively affect your decision-making process. 5. Capital inefficiency. Trading in non-performing or slow-moving market or pairs can tie up your capital, preventing you from taking advantage of better trading opportunities elsewhere, and thereby missing out on more profitable trades. And there are several other disadvantages which may include 1. Time and resource wastage. 2. Market manipulations. 3. Poor risk management. 4. Economic and political risk, and a lot more. Be sure to stick around because by the end of this video, you will understand the major pitfalls to avoid and how to ensure you are always trading the right instruments or currency pairs to maximize your success in the forex market. Before we continue, kindly take a moment to like and subscribe to this channel and leave a comment on this video. This encourages me to bring you more and more quality content. And now, I will show you the proven system to ensure that you are correctly choosing the right currency pair to trade. Let's go. So one of the major problems a lot of traders face is the choice of choosing the right currency pair to trade. So a lot of new guys come into trading and they start to trade random pairs at the same time, and this is very disastrous. So you do not want to trade the random market every single time you want to trade. You need to trade carefully selected market or currency pair when you want to trade. And there are people who also come into trading and they start to trade a market just because other people on social media are posting profits from the same market. And this also is very dangerous. So you want to make sure that any market you want to trade is a market that is carefully selected and it fits your trading style. And this matters a lot. So in this video, you will learn about how to carefully select a market and choose the right market to trade that is going to suit your trading styles and your trading goals. So let's get started. So the first issue that happens is that when new guys come into the forex market and they open their trading platform, they are faced with different currency pairs or instruments that they can trade from. So it becomes very tough. It becomes a serious issue to choose 1 or 2 or 3 out of these several lists to choose to trade from. So that's the first problem that they are faced with. When you open any trading platform, you find different instruments, different currency pair. So making a choice to trade any of these can be very tough, especially for traders who are not as experienced or as exposed to the forex market. So that is the first issue. Come so paralyzed with making a choice on any of these. So the best way to choose a market that you should be trading is what I'm going to review to you right now. So there is simply a system that is proven and tested, and you can use this very system to choose the right markets that you should be trading. And I always tell people, you do not need to trade several markets at the same time, or several markets does not translate to a lot of profits, right? So right now on this trading platform, I have about 7 markets open on this platform. I have EA, I have EU, I have NZD CAD, I have AJ, I have gold, I have USDT and GJ. So I do not have to trade all these markets at the same time. I always recommend trading about just 2 pairs or 2 instruments, and you are good to go. So every money that you want to make, you can make from just trading 2 instruments, and you are good to go. So trading a lot of markets does not translate to a lot of profits. It rather exposes you to a lot of risks in the market, a lot of serious financial risks in the market. So you want to limit your risk exposure, and it's going to give you a good chance at being profitable in the Forex market. So how do we go about picking the right markets that we need to trade? So there is a proven system I'm going to show you in this video, and you'll be able to use that system to choose the right market that you should be doing for trading. So this is what we call the VCC checks system. The VCC check system. The V here stands for volatility check. The C here stands for clarity check. The last C stands for correlation check. So you simply apply this system when you have a list of options, right? So for this example, I have about 8 pairs that I can trade, right? So I want to choose 2 out of this list here to trade, which means I want to do away with about 5 of this market and simply focus on just 2. So I'm going to apply the VCC check system to tell me which of these markets I should be trading. I do not want to trade all of these at the same time or randomly. I want to focus on just a few carefully selected 2 that I want to be trading every single time I want to trade. So I need to simply apply the VCC checks to tell me the best 2 out of these 7, and I'm going to trade just those 2. So how do I go about this? Let's get started. So the first thing, let's type out our currency pair list. Let's type it out right here. So the first market here, we have EA, EURUSD. So in this example, I have 7 different markets that I want to choose from, right? So I need to trade just 2 out of these 7, and all I need to do is to eliminate 5. So how do I eliminate the 5 and trade or choose the best 2 that I need to be trading? So let's go about that. So the first thing we need to do is to apply the volatility check. So what is volatility? Volatility has to do with how heavy the market moves. There are markets which move so heavy. So for those markets, you may require a lot of capital to trade them. Likewise, there are markets which move so moderately. And for those markets, you may not require a lot of capital to be able to trade them. And this also translates into your risk management. So when you trade a market, for example, like USDT or gold, these are markets which move so heavy. So if you want to trade this market, you need a lot of capital involvement to trade them. Likewise, a lot of risk management need to be applied as well. So for example, if you trade USDT, your risk management, your stop loss for this type of trade could be about 70 pips, 50 pips. But so when you trade a market like EA or EU, EURUSD, your stop loss in this type of markets could be about 20 pips, 30 pips, and you are good to go. So different markets has different level of volatility. So you need to check that whichever market on the list suits your risk tolerance. So this has a lot to do with your risk management, your risk tolerance in the market. So if you are not so comfortable with taking a lot of risks or exposing your account to a lot of risk, you want to trade a market which is not as volatile, which is volatile friendly. So market like EURUSD is volatile friendly. Market like NZD CAD is volatile friendly. But a market like gold, USDT, they are highly volatile market. Likewise, GJ can be moderately volatile. So this market, they move so heavy. So if you are not so comfortable with taking a lot of risk, you need to check that the market you are choosing to trade is not as heavy as you should be trading. So what we need to do here is to eliminate, by using volatile as a factor, the market which do not align with our risk tolerance. By using volatility as a factor, we need to eliminate the market which do not align with our risk tolerance. So US30 is so heavy, this does not align with our risk tolerance level, so we can eliminate US30. So when we delete US30, it means we should delete US30 on our trading platform. So I simply delete US30. And now we have these 6. So which of these also is highly volatile? I would say gold. So gold is highly volatile. If you have not traded gold, when you trade gold on a demo account, you can easily see how heavy it moves. It moves so heavy. Volatility can work against you easily. Likewise, this can work towards you, but we do not want to expose ourselves to too much risk in the market. So we are going with markets which are not highly volatile. So I may have to delete gold as well because it is highly volatile. So when you delete gold, you can also go ahead to delete gold on the list. So all we need to do here is to delete the top 2 which are highly volatile, right? Highly volatile. We delete the top 2 which are highly volatile. So right now we have about 5 markets which are not so volatile, which means we are done with volatility check. So with volatility check, you can delete about 20 or 30% from the options that you have, and then you proceed to the next check. The next check has to do with clarity check. So what is clarity check? Clarity check is all about applying your analysis concepts. So clarity has a lot to do with visual, right? So it depends on the type of trader that you are or the system that you trade. If you're a technical trader, price action trader, fundamental trader, you need to apply your system of analysis to know if a market is clean enough for you or it is easy for you to apply your trading system to, right? That is all about clarity. So, for example, for me, I'm a technical trader, a price action trader. So all I need to do is to look at the chart for each of these pairs and look at the ones which looks very clean and easy for me to read. So you need a market which is very easy for you to read. So a market which is easy for me to read may not be easy for you to read. Likewise, a market which may be easy for you to read may not be easy for you to read. So that is how it is. So choose the market which is very easy for you to read and you are good to go. So in this case, we need to look around and look at this. We have 5 options here. So we may do away with 2. We need to shortlist 2 out of this. So we have 5. We need to delete 2 out of this by using clarity as an example. So clarity, like I said, has a lot to do with how clean a market looks. You look at the chart, you look at the fundamental aspect. If you trade fundamental, you look at the fundamental aspect, how readable it is, how easy it is to make a decision by using your trading system, and you apply it to it and use that as a factor to choose the right one you should be trading. So for a technical trader, all you need to do is to look at the price, look at how clean it is to see the trend, look at how easy to see or spot the key levels, and you are good to go. So you do this for the different markets that you have on the chart, and you decide on which one is so clean for you. All you are doing is applying your analysis system, your system of trading. Apply it to these 5 and look for the worst 2. The worst 2, you delete them and you keep 3. You delete the worst 2 and you delete 3. So let's do a quick review. So GJ here, you can see how GJ trend looks like, especially on the H4. As a high time frame trader, I use high time frame a lot. So if my H4 does not look so perfect for me, I simply delete that market. So in GJ, I'm going to delete GJ from my list. I'm going to shortlist GJ, which means I no longer have GJ as an option. And I can also look out for the other market, which ones does not look so clean. We are looking at clarity as an option. So we are deleting the market by using clarity. So I have EA, I have EU, EURUSD, and then I have NZD card, and then I have NZD JPY. So for me, I think I'm going to delete NZD JPY. So like I said, you need to focus on the market which looks the most clean, right? The cleanest market are what you need. So I've deleted NZD JPY. So I would simply shortlist NZD/JPY from the list. And right now, I have just 3 markets to choose from. I have EA, I have EU, and then I have NZD/CAD. So these are the 3 cleanest markets from the options right now. So the next point now is to use correlation as a factor to shortlist one out of these. So remain 3 pairs, and all I need to do is to apply correlation and use that to shortlist one of these 3. So correlation has a lot to do with trading, and when you are trading the markets which is highly correlated, it increases your risk bracket. So you do not want to trade the markets which are very correlated, which means, for example, if you trade EURUSD and you trade AUD/USD, you trade EURUSD and you trade AUD/USD, it means this market has a good chances of going bearish at the same time or going bullish at the same time. So if you have to take a loss on these markets, you would take 2 times of that loss, right? So you do not want to expose yourself to a lot of risks in the market. You want to choose markets which are not highly correlated. So, for example, from this example over here, I have EA, I have EU, and I have NZD/CAD. So from this example, you would notice that these 2 have euros in common, right? EURUSD, EURUSD. These 2, they have euro in common, which means they are of the same family. They are of the same family. NZD/CAD has nothing in common with any of these 2. NZD/CAD has nothing in common with any of these 2, which means I have to delete any of these 2 and use that the best option out of any of these 2 to pair with this. So I have a decision between any of these 2. So EURUSD and then EURUSD. These are 2 markets of the same family. You do not want to trade 2 markets of the same family. You want to open your risk bracket. So you need to make a choice between any of these 2, and then we pair that choice with NZD/CAD. So I need to simply look at choose the right market from any of these 2, and then I'm good to go. So EA, I have a decision between EA and then EU. So automatically NZD/CAD has qualified for the list. NZD/CAD has qualified for the list. So the choice now lies between EURUSD and then EURUSD. So EU is actually very clean, and also the risk involvement in this market is not so huge. So with that in mind, I'm going to simply take off EA, and I would focus on EURUSD. So this becomes the 2 markets that I should be trading because they have passed my checks. So the volatility check is passed, the clarity check is passed, the correlation check is passed. These 2 are not really correlated. They are not correlated. So I can trade these 2 and focus on these 2 to make every amount of profit I need to make in the market. So this is really how easy it is to apply the VCC checks. When you have a lot of choices to make to choose from, you apply the VCC to break down these choices into the best option that you should focus on. And that is what you should be doing in the Forex market. So if you have enjoyed this video, if you've learned something from this video, be sure to give it a like and subscribe to this channel, and leave a question or any comments you have, any question you have, you may drop them in the comment section, and I'll definitely get back to you. This is simply how you can get the best currency pair to trade in the Forex market every single time. Thank you for watching, and I'll see you again in the next lesson. Bye.